Mic check, mic check. Oh, and we're here. Thank you guys so much for joining me tonight. Just getting set up here. Let's see if it's all. Oh wait, wrong shoulder. Oh, wrong shoulder again. It's completely inverse, but there we go. Got to get it in the view. The official Tetron live board. Thank you guys for joining. But again, gonna optimize the setup soon. Whether you're watching this back or watching this right now live, I appreciate you either way. Yeah, so we'll have to get that in here more somehow, some way. But for today, probably just rocking and rolling with it back there. Get in the shot a little bit, but yep, it's straight. Okay, yeah, because Freshmaker, last time I was saying, I was like, oh yeah, it's backwards, but I'm just an idiot. And it's because I was looking at it on my phone camera when I was testing it out. But also, I'm an idiot in the sense, Rance keeps telling me, or trying to explain to me, how to fix the OBS thing, and I haven't fully taken the time to understand that. So that's something I got to do. A lot of stuff in the pipeline. Really just evolving as a person. It's kind of crazy how it happens so fast, and life just keeps moving along. Like, especially once you're out of school for a while, just like, damn, the days just go so fast now. I don't know. That's just kind of where my head's at. But I'm gonna hit the chat real quick. Had a dream last night. GME was at $62. Let's go. Jackson's. That would be awesome to see. That'd be absolutely epic. It's a very specific number, so who knows? Maybe it'll come soon. Good evening, Freshmaker. Thank you for being here. Oive, John Jar, good to see you. Thank you for being here. I was hoping that Playr would be released this quarter to push up revenue. Is there still a chance? Jackson's, honestly, I don't think so. I think even if it comes out in the near future, nothing's really going to start to show up now till quarter three, because then quarter two is going to wrap up, I believe, at the end of this month. Because if it was the end of Q1 and end of April, then May, June, July. Yeah, so it should be at the end of this month. So more likely no than yes. Of course, it's still possible. And as a whole, I really think, it doesn't really matter exactly when it comes out. Of course, the sooner the better. But it's a big part of what they're doing. Excuse me. And looking at the patent again, I believe I had it pulled up here. Got a lot of different tabs open. Oh, duh, it's literally right here. I thought I was looking for something else. But they mentioned various things, and this is just ugly to read and hard to read off to you guys, so I just threw it in ChatGPT. Okay, well, it didn't come up. I just said explain in simpler terms. Let's see. Whoop. I just copy, and I do explain in simple terms. And I really like ChatGPT. I've said it before, I'll say it again, for a research tool, because it'll just summarize points like this, just possibly make information cleaner. I'm not saying you should blindly trust it in any which way. It's just a tool to utilize. I think it's a good tool to have in your toolbox when you're researching GameStop or any individual investment. But we can go down the line here. So you can kind of read along as I say what I'm about to say, because I don't want to read through all this. I've already touched on this in the past, and obviously anybody can go read this themselves, type it in ChatGPT themselves. But really what I want to touch on is the various things it mentions, from esports, to a global computer network, various devices, streaming gaming, broadcasting and transmitting gaming content. Software enables users to stream and share their gameplay and other digital content related to gaming. So that tells me, the more I think about it, it's going to be a big platform, but I think it's going to start out with the core of it being a game client and really trying to incentivize other games coming on and making the games the main focus. That's what the Telos Town Hall touched on. And that main focus is so important, because if that hits, I feel like all these other things being mentioned here just start to co-align with it and vertically align. And I really think that's what they're doing as a whole, with strengthening their brand name. So you can get into esports, you can get into streaming if the platform itself grows, if players feel the power in going to the platform, and even those that are not just interested in GameStop and interested in gaming and like, oh, this is a new thing. What is going on here? I need to try it. They need to create that type of urgency. And with Ryan Cohen at the helm, I think it's a huge, huge deal, because also now he's interacting with people on Twitter. How many CEOs do you see doing that? And of course, he's not going to be able to do it for everybody. And some people are like, oh, it's just for show, this or that. Like, get out of here, right? Like, he's still helping. And I think it really touches customers when you do stuff like that. And I think he really understands that. And he also understands they can't do that constantly, always. But if he's going to be on Twitter anyway, and maybe he's going to scroll by that, he's like, well, I am CEO and chairman, so maybe I could address this right here. And then also, it brings up conversation. And even if he's not necessarily directly reading everything, maybe there's a team that's reading things, right, that are going on. So I think it's really interesting. I should actually show that real quick. Let's see if we get that pulled up. Hey, Tetron, Ian, thank you for being here. Appreciate you. Hope you're doing well. Make sure all messages are on in case you miss anyone. Proof it's over. Morantz, my guy GameStop Echo. And yeah, I do want to quickly touch on my tweet the other day. Maybe it upset some people, or a lot of people are like, oh, I'm buying more now that you tweeted this. Because I tweeted, there's nothing left to invest in Bed Bath & Beyond. I think there's a trading opportunity, right? Anything with volatility has trading opportunity if you're in that game. But it's not a situation where it's like, oh yeah, one day Bed Bath & Beyond's going to pay me dividends. One day Bed Bath & Beyond start going to buying mass amounts of stock. They are getting rid of everything. Personally, I don't see it, right? And then it's fine. You know, people can do what they want at the end of the day. I really was saying it genuinely from a place that I feel like people's emotions, and this is just what I think. You're more than welcome to disagree. I think people's emotions now have gotten very caught up in we got to fight back, right? Or this, it's so obvious some of the weird things, right, that allegedly go on out there. So people are frustrated, and also a lot of things happening in the world. The average person is economically frustrated. So I think that really incentivizes people more and more. It's like, oh, well, everyone else is doing it too, and this does seem kind of crazy. And then a lot of people really are just focused on the hype. And I just think there's a new way with the average person, the way the average person invests into everything. But at the end of the day, too, if you believe in BBYQ and you got your thing going, God bless you. I wish you all the best. I really do. I really hope it works out. I hope I'm wrong for you. I don't have any skin in the game. I just don't want the average person, or my thought was the unknowing person or the person think, oh, what is it? I don't know. I guess it was not even worth tweeting, right? I don't know. That's just some of my thoughts I wanted to build on there, but just kind of wanted to touch on that. But regardless, I'm not really trying to talk about it anymore. To me, it is what it is, right? There's always going to be people. There's going to be the PP Clown Show who block me just because I like brands or because I tweet with them. I'm sorry, stream with him on occasion. So I just thought that was funny. But Ryan Cohen, Tetron, good to see you. I bought more GME today and loved every minute of it. Christopher Card, good to see you as well, and happy to hear you got some GME. It's so funny typing Ryan Cohen. There's so many accounts with images of him and things like that. It's really interesting, that's for sure. Jesse, good to see you. I don't think Playr will be the money making machine right now. It'll start like many people think. Could take 1 to 2 years. I think you're absolutely right, Freshmaker. I know you said that last time, and I think it is a great point. Nobody truly knows right now, but something I do think of now that you mentioned that is that Telos said on the platform. Whoop, so I gotta turn the side one off. But Telos said during their town hall that all games initially will be free to play. I forgot I actually have some of the notes here, or do I? Let's see the note list. Work hard or please leave. I love that. And I think that was in response to the girl that was like, OMG, about that like article where it was like, oh yeah, it's so boring there every day. I hate it. But let's see. All games will all be free to play, and gameplay is first. Smart contracts are second. So Web 2 familiarity, Web 3 functionality. I think that's what they were saying. I think I got it right this time. So a lot of the problems in the past were like play to earn, trade being the main objective, the NFT being the key to the game, things like that. This is all, hey, here to play the game. The simple version is always going to be free. Yes, there might be more you need to pay for to unlock like any other game, but there's always going to be a free version. And I think that's a great way to just compete with competitors that are other platforms. And I don't know why there's always a chain link tagging me recently. It's driving me nuts. It's crazy. And then also you see them starting to market more. And I think they'll start marketing a lot more. And I would really like to see them do more influencer partnerships like this as they continue to launch Playr and get it out there. So the more it's out there and the more it builds up, the more they're able to market, or there's more to market to, and then really just everything vertically aligns. I think that's really kind of the vision Ryan Cohen has with everything and how they raise their margins over time. But I do think you're right, Freshmaker, for it to really kick off, I think it's even going to take more years, right, to be huge. That is, right? I think it can really start benefiting them in terms of growth and benefiting their margins in a year or two, absolutely. And I think there's still final cost cutting that's taking place, which I actually did want to touch on a little bit later here, because I think we're going to see costs come down again quarter over quarter for Q2 22 versus Q2 2023. But at the same time, I think we're also going to see. I mean, I actually have to really look at the numbers before I can say this, right? But I would like to think, based on just off the dome from previously looking, it's quarter over quarter Q2 general administrative costs versus Q1 of this same year to be lower. I think that would be nice to see. I think it's possible. I have to kind of look, but we'll get to that. But I wanted to get to his replies. This one never got to. I'm here, you steers, and John Jar. Good to see you, man. Good to see you. So I like this. He replied about this situation, and actually, when I actually saw this post before he replied, and I thought to myself like, or I think I thought like it's probably because it's like without the shipping and handling, because this has happened to me before. I just remember in the past with like a random couple other just websites I was shopping at. I don't know. I just remember like various times in my life. So I thought maybe that's what it was. And then Dizzy replies, right? It says the GameStop site has several UX dark patterns that I've pointed out in community calls as well as tweets in the past. We'll have to be able to provide feedback if you do a CX audit. If any of you guys know what that means, I'm not even sure. Let me see. What does it mean? UX dark patterns on a website. What does that mean? See, I don't even know what that means, but it's something that can be fixed. And I think feedback is great. And I've been thinking to like, if you even just mail something to GameStop, like a piece of mail, handwritten, that'd be so genuine, like a genuine idea. Or I don't know. I don't know if, who knows, right? How it actually works when they receive it. Depends if the person who receives it cares, it gets to the right place. So you gotta just think about inside operations. But I feel like it'd be legitimately accepted just because of the nature of GameStop. And I think any good company would want that perspective. But where was I? Snoochie Boochies. Sir Moist, thank you for joining. Misdirection. The design intentionally draws the user's attention away from certain actions or misinformation, redirect them towards a different or offer less desirable option. Force community. Continuity. Users are enrolled in a subscription or service without their explicit consent or knowledge. It becomes difficult to cancel or unsubscribe. Oh, okay. Refers to manipulative design techniques used in user experience to deceive or trick users into taking certain actions they may not intend or benefit from. Dark patterns are typically employed to achieve the website owner's goals at the expense of the user's best interests. Okay, so I don't know Dizzy that well, or obviously I don't know her personally. I just when I say no, I just mean from Twitter. But I think she's invested in GameStop. She's for GameStop. I don't think she's saying like, oh my god, like this is bad. I think she's saying, oh hey, there's a few situations where I think you guys could improve on the patterns of clicking to get to a certain point. Or there's definitely specific examples, and I like that Ryan Cohen said, please send specifics. I will DM you now, because that's a very specific thing, and I'm not even fully aware of this term because it's the first I'm learning of it. But I don't think it's necessarily as negative as maybe ChatGPT is making it sound. I think it's more like clicking here, like, oh, I thought this was gonna make me do this, but it actually made me do that type of thing, if that makes sense. And I think those small functionality things are really so important and a big part of what GameStop was lacking in the past under old management, simply because of no good retail technology, not really keeping up with trends, just kind of, yeah, we sell games, or yeah, this is what our suppliers giving us. Like that seemed to be more the mentality, whereas now there's a lot more hands-on. And of course, we don't truly know unless you're truly working for the company, right? But that's why the top of the chain of management really matters. And Ryan Cohen likes to work. He's making sure people in there are trying to work hard, or please leave. He canned his CEO, right? And he's like, all right, screw it, I'm becoming CEO. After he said, by the way, in his interview with Toast, I didn't want to become CEO of GameStop because I know how grueling it is to be a CEO. You're the life of the business. You're constantly have to be on top of everything. And then he becomes CEO, right? So think what you want about that. Food for thought. But see where else. Believe so too. I love that he replied to Whoosh. I love that he replies to people. Like if you get a Ryan Cohen reply, like that's a true honor. I'd love to one day. See, Ryan, longtime shareholder, trying to place an order and having issues online with overseas customer service. Have had friends complain about service for the last 12 months. Didn't believe them, but experienced it myself. Not a good experience. We'll send you a DM now. The CS team advised me the issue has been identified and resolved. If you try the order again, it will succeed. You gotta love that. And again, he's not going to be able to do this every time. And it's not that this is necessarily a sustainable model, but it's perspective and social perception, I think, where people are like, oh, Ryan Cohen's evil, then maybe pops up in your feed and you're like, oh, okay, it's actually like something pretty valid, like human to human. I don't know. It just maybe will change a couple people's perspectives, and I just think it matches his brand, it matches GameStop's brand, and again, just vertically aligns everything. And I think the business could be vertically aligned, but at the same time, you have interests vertically aligned of management, shareholders, employees, customers. When those interests are all aligned, I think that's just what's so golden about the business because it is all about GameStop in the center, no matter whether you're an executive, a shareholder, a customer, just an individual randomly shopping, or a Bed Bath hater, right? So GameStop is the core of it. It's the brand and strength in its brand name. I think is what they need to continue to grow because I think the brand is strong, but at the same time, in a way, I feel like it's polarized because there's still the people that are like, "Ooh, GameStop, they only give me $1 for my GameCube game that time in 2007. Oh my God, I hate them." Like, there's like people like that, and then the people who are making those like silly videos, just like, "Oh, they're so," and it's the worst place to work. It's so boring. Blah blah blah. Like, it's just comical, but touch on this related to Web3 gaming. There's other companies that are trying to get involved with it. So here we have Activision Blizzard when they've been mentioning it earlier this year. But I talked about this a little bit in the past, and this is my conversation with Bard. So Ken Zyla, the company's chief strategy officer, said that Web3 gaming will be still in its early stages, but that Activision is excited about the potential of this technology to transform the gaming industry. He also said the company is committed to exploring the possibilities of Web3 gaming and that it is looking for ways to bring the benefits of this technology to our players. So there's the mention of Activision. I said, oh, well, what other major companies have commented on Web3 gaming? We have EA. Their CEO said they're watching it closely, excited about the potential of this technology to transform the industry. Two CEO, and that's Take-Two, Strauss Zelnick, said that the company is open to exploring the potential of Web3 gaming, but not yet convinced this technology is ready for prime time. I think that's a fair assumption, but they're saying, hey, yeah, we're still keeping an eye on this. This is definitely interesting. Sony's not made any official announcements about Web3 gaming, but the company has been hiring for Web3 roles. This suggests the company is at least considering the possibility of entering the space. Yeah, you certainly don't hire for no reason, so I think that's a great find with the robot. Microsoft has been more vocal about its interest in Web3 gaming. In January 2023, the company announced it will be investing in Mutable X, so there's a tie. NVIDIA has also been investing in Web3 gaming. They announced they're partnering with Sandbox. That's one of those games just like Decentraland. But I remember I played that once and it's so corny. It's like a GameCube game, but worse. I don't know. It's very behind. I think more about it's more about these game platforms enabling it within their games and a game client like GameStop offering it built on a platform like Telos. Let's see. No, make sure always trying to make sure all the chat's on. But for real, thank you guys all for being here. We're gonna move on. So I don't know why I got logged out here, but let's see if we can get logged in. So I started using this, just trying to get more organized, try some different stuff. I don't even know how I found it. I think my assistant ChatGPT told me about it. I don't know why this doesn't want to work. Okay. So I also got the filings pulled up, but I think I'll save the numbers for later. But what I'm starting to do is I really just want to get all my notes in one place, and I'm going to interview. I said this in the past, and I'm really trying to make it happen soon. Two things I'll say here. I'm trying to interview my grandfather, who worked out at Wall Street straight out of high school. He used to run the orders to the floor, like when he first started, and then he just moved up the chain and wound up working there literally his whole life, and his whole career, that is. So, gonna ask him some questions. So if you guys have any ideas, throw them in the chat right now, and I'll possibly add them to the list. But I'm starting this list here with the executives. I want to get their details. So we always talk about executive compensation, and I know I've touched on it a lot of times in the past, but I think you can always explain something more, right? Or there's always more to learn, more to understand. But I'm going to try and do the same thing with Diana. And there's actually just a CFO spotlight on her. If you want to look that up, that's something I got to make a video on or possibly touch on in my stream on Wednesday. So I'm going to go ahead and continue this, possibly later in the stream, probably like sometime later on, I don't know. But I'm going to do the same thing I did for Patel, near Vinny Patel. And to quickly say the other thing I was going to say, because I said two things, say one thing. Oh, the interview. But also, Friday I'm off, so I'm either going to do a live stream or work on some content, and I'm possibly going to take a trip and I don't know, maybe do an IRL stream. That might be really corny and really stupid, but it also might be really fun and a one-time thing. So keep an eye out Friday during the day. It's going to be a day stream because, again, I'm off work, so keep an eye out there. But to quickly hit the chat, I got logged out too. They're hacking your computer. Bipolar? I certainly hope not. That would suck. But do you use Evernote? Do you think it's nice? I literally just started using it. And I'm like, oh, this is pretty sweet. And I was telling my brother, I'm like, if this actually helps us get organized, like it'll be worth getting the premium. Not right now at all, but in the future, you know, if we want to grow and continue to like network with people and whatnot. But Jabari Carter says Telos. Yes, sir. That's exactly right. Telos is the platform that GameStop Playr is being built on. So let's quickly go over Nir Veni Patel's offer letter, right? I summarized it here in bullet points. So he's getting paid $200,000 annually, and it's paid on a bi-weekly basis. So paid bi-weekly, and it's over, and he has a sign-on bonus, I'm sorry, of 3.4 million. So he gets it upon signing on with the company. However, he doesn't just get it right up front. Here's your $3.4 million. And keep in mind, he signed this letter May 12th, 2022. Only a little bit after that, right? We're about 14 months after that now, right? June, July. Yeah, actually exactly 14 months to 2 days from tomorrow. So he's been paid 1.7 million in the first year, about another 0.2, 0.3 million, right, to start out. So he's only got about 2 million of that 3.4 million sign-on bonus. And how it's paid is it's bi-weekly with his regular pay over the first 2 years. So not only is he getting 200,000 annually, he's also getting 32,000 bi-weekly. So as these executives that have this short-term like sign-on bonus, that's less expenses in the future. It's not necessarily going to make a huge deal, right? What is, you know, just 1.7 million to GameStop, but at the same time, that's still $1.7 million. So where it gets exciting though is when you look at the granted restricted stock units. So he's getting 14 million, and it's determined by the average. And actually, I didn't even finish this. So the average, right, is based on the last, okay, so if I should just pull it up, but I believe it's the first 30 days after the start of the next quarter, the average stock price, right? Let's see. On the first business day of the calendar quarter that commences after your start date, the grant date. So the first day after the start of the next quarter. So that was, I don't know. I'm not going to try and math that out in my head right now, but you guys can go back and look at that specifically. But you could look at that stock price, and this is something I'm going to do in the future. I'm going to grab that stock price, and if I can divide it by grab those 30 stock prices, or let's see what it is. There's not 30 for the 30 trading days immediately preceding the grant date. So not exactly a month. It's probably more like a month and a half because you have to think about weekends, potential holiday thrown in there. If you calculate the average of all those stock prices, that's the initial equity reward. So that is the stock price, $14 million divided by that average price of the 30 trading days after the start of the next quarter where this is signed. Those 30 days, that average stock price, 14 million divided by the average stock price is how many shares he will be vested. However, where it gets interesting is those shares vest annually, right? So after the first year, so this year, only 10% of those were vested. Next year, another 20% gets vested. Then years 3 through 5, 23.3% is vested. So that's incredible because it's scaling up. So if GameStop's stock price begins to appreciate going into 2025, he's like, damn, I better stay with the company and keep making sure it's thriving because my shares are vesting at the price it was back in 2022. So that's how they're building their sign-on structure. And I kind of understood it, but when you really write something out and you really, I feel like, have to do things multiple times to fully understand it. And that's why I'm kind of okay with repeating myself sometimes, because I feel like you just say things in a different way, you read things in a different way, and you know, there's just something slightly different. Like, oh, something just clicks. Like, I don't know how to describe it, but I hope I'm making sense right now. And then also I got his work experience here. Obviously GameStop, Amazon executive prior to, so that's good experience. I didn't even put the other one here, but you could also grab his LinkedIn right here. But I don't want to pull it up because I'm going to pull up my LinkedIn. Then you can also look up Diana's. And again, I'm going to try and map this out for her information as well, and then with the other executives. But also keep in mind, with the Form 4s, Ryan Cohen is not being compensated anything. He's strictly in it with his own money. It's truly unique, right? You just don't see that every day. And I know everyone's like, oh, everyone love Ryan Cohen, because that's just abnormal. It's absolutely abnormal. It's incredible. I don't know. I just think it's such a special part of everything that is GameStop and him operating things. He hasn't earned a single dollar by selling shares or paying himself. Simply has bought in equity, and twice since all the craziness that I'm sure he never even imagined, right, when he initially got involved, began. So he's bought in twice after even something he probably could have never expected. He's still bought in twice after and is fully committed to what he's doing. And when you have somebody that has their eyes on the prize like that, it's truly hard to stop somebody that's crazy enough to think there's nothing that can stop me. And that might sound silly, but I really believe that, and I'm really trying to just build that mentality, because when you just believe you can do anything, you really can. Like, as corny and cliche as that really is, it really comes down to whether or not you execute. And I realize there are days I don't do anything and I go, damn, that was a day I could have been executing or growing my channel or doing this or doing that. And part of my problem, I think, is I'm not organized. And I keep trying to say this out loud to really get myself like, am I just going to keep saying this shit, or am I really about to take it to the next level? Because truth is, guys, I want to be a business owner. I want to run my own things. I don't know exactly how. I don't know exactly my plan, but I'm going to figure it out as I go. And I don't want to work for somebody else 20 years from now. I'm fine with doing it right now. No problem at all. But down the line, that's just not me. So we're just keep rocking and rolling here. Hopefully you guys are watching the start of a legacy. Not hopefully, you are watching the start of a legacy. But LOL, executive compensation is out of control. I'm with Ryan Cohen on this point. All pay over a certain amount should be performance based. The performance metrics should be aggressive. It is unique. We need more of that. Yeah, bipolar. I think you're absolutely right. It across the board, the way the wealth gap is dividing more and more and more. It's partly, I think, because of the endless money printing. The endless money printing, right, is just like money flows to the top, and it just makes it harder and harder to get to that next step, because every class, right, the middle class is widening, the middle upper class is widening, the upper class is widening, the middle lower class is widening, the lower class is widening. And what I mean by that is the gap to get to that next class, right? Whatever that threshold is, just because there's more money out there. If before, right, it was like $100,000 span, and you double the money supply, theoretically it's a $200,000 span. That's an extremely scaled down, very simple explanation, if that makes sense. But to me, it's widening the gap you need to close to jump to the next class. And it's just making more people like, oh, well, we need this, we need that. And it's like, no, we need to work. And that's why I love Ryan Cohen's message, because it reminds me, like, I need to work. If I don't work, you don't succeed. It's that simple. It's really that simple. But since we're kind of shifting to economics here, something I do want to talk about is not gold necessarily or Bitcoin, but I am becoming more and more bullish on Bitcoin. And really it is because of what's happening with the dollar. And of course, I don't give financial advice. So you're more than welcome to disagree, and don't buy Bitcoin just blindly because I'm saying I'm interested in it and I'm starting to acquire a little bit. To me, it's an alternative asset class, and it's deflationary, and we're only going to continue to get more inflationary based on what I'm seeing. The amount of federal debt outstanding. I've read a lot of Peruvian Bulls work. I know not everybody agrees with everything. I don't necessarily agree with 100% of everything, but I do really see the perspective for Bitcoin. And to me, as a young individual, the risk versus reward is very, very worth it to me, because I think overall it goes to zero. Fine. I'm not accumulating a massive position like I have with GameStop. I'm accumulating an alternative position, right? So if it doesn't work out, so be it. But at the same time, with the Bitcoin halving coming up and more of these big names beginning to get involved, I think there's a lot of potential for an upswing, and I'm not necessarily going to hodl Bitcoin. Yes, maybe some, just keep seeing where it goes over the long term. But if there's a big cycle in 2024, an upward cycle, I'm absolutely no problem happy with selling. And Maybe I'll throw it in a money market account or whatever it is at the moment in time. And right now, that's also something I'm doing. I'm building up a little bit of a money market account. But I don't think cash is a great investment right now just because there's high interest rates because of the inflation that I believe we're going to continue to have. So what I think the reason the reason I am trying to stack cash is to build an emergency savings because again, as a young individual, still just building all my everything out, right? I just paid off a lot of stuff, really just trying to get involved in different assets. And to me, like my whole point in describing this right now is I think it's more and more important to own assets as the money printer continues to be fired up. Yes, GDP keeps going up, right? Oh, yeah, it's a little blip and it's going up again. But look at our debt, right? This is the real issue. So all of a sudden, boom, this big jump, like it's incredible. And it's now starting to rise at a pretty fast rate. Like we were spending crazy after the pandemic, right? And we raised the debt ceiling and it's kind of just like back to it. And if you look at the debt by day, it goes up a lot. It goes up like billions, trillions a day. Like it's incredible. But the real issue, I don't know why none of these want to load, is the debt to GDP. This is what's scary. So right after the pandemic, we shot right over 100%, right? We already kind of were going in. We're teetering on it. And now like, oh yeah, we're trailing down. But our debt is starting to go up faster and faster. And we still are serving a deficit, right? So what a deficit is, if you don't know, just means we are not collecting enough in taxes. The government doesn't earn enough money to pay for everything they're paying for. So this has been going on for a long ass time now. Ever since the first crash, we've really never gone back. We just kind of always kicked the can down the road since 2000. The last time we ran a surplus was 2001. And we started to get back to it, and then 2008 happened. Started to get back to it. Nah, fuck it. We don't even care. And then pandemic, no way. We're trying to get back. It's tough because you have to either raise taxes or bring in some money one way or another. Otherwise, you just need to continue to take debt. And now the issue is interest payments on the debt is starting to skyrocket. Because keep in mind, where we started having a deficit really bad, like over here, this is like a no interest rate time period. And while we were accumulating debt over these past 10 years, it's kind of fine, right? Or so this is debt to GDP. It's kind of fine, right? Because our interest is low. The interest rates are like always 1%. It doesn't matter. But now, if the government needs debt or the Fed needs debt, what are they going to do? They're going to sell T-bills. So then it's like, okay, well now those have a ton of interest. Our money market has a ton of interest. So I've been trying to study this more and more. I just want to continue to become familiar on things. And that's really what I'm seeing with the dollar. And then when you see the world population of countries, debt to GDP, the United States is right up there at number 12. I mean, I think the United States is definitely in way better shape than all these countries. And obviously there's a lot of different scenarios. And you're like, oh, well, how's Afghanistan's the lowest? But what is their GDP really looking like year to year? I don't know, right? So it's not just simple as looking at this and go, oh, America sucks because they're 12, right? It's obviously not that simple, but it's alarming when it's in this category of names. We're not, and then also like Italy, Japan is a great example. Like look at their stock market for a long time. It hasn't really gone anywhere now, right? So I don't know. This is all just food for thought and kind of why I'm choosing Bitcoin as an alternative asset, but I also understand, owning a little bit of gold or whatever you think it is best to own. I think you should own that. But I'm just saying, I think assets are becoming increasingly important as this interest continues to accumulate, and there's no evidence that the printer's not going to stop, and printer can't really stop if the interest rates are high, and there's no evidence they're going to lower. So various different things for me. And then for Bitcoin, I also see the halving coming up and a lot of just big names suddenly wanting to get involved. So to me, I think that's also like a swing trade possibility, and then also just another asset class to own. But that's my perspective there. Let's see. I don't ever want to be a business owner. I hear you, bipolar. It's definitely not for everybody, and I think there's a lot of stuff I have to learn before I could do it. But I truly think it's something I want to do one day, or be a part of something. I don't know. Be a part of creating something. So maybe if I find the right partners one day, we'll see, right? We'll really have to see. I'm here. Albert's Papa, good to see you, man. I hope you're doing well. It's been a while. I really hope you're doing well, man. Happy to see you. Hey, Oliver's, yes, sir. Everyone's up in here. We love to see it. But yeah, that's some of my thoughts on like the economy as a whole and just owning assets. And we say, oh well, look at gold. It's been shit for a long time. But you know, as the dollar's created, I don't know. It might be different now, right? The history, like what it's been historically, doesn't necessarily mean it's going back to these levels. But again, I'm not a financial advisor. I'm no financial expert. I'm not an economist. So go research anything you hear me talking about that you find interesting in depth before you make any kind of decision. That's always important. But let's get back to GameStop. Those are just some of my thoughts on economies as a whole, stock markets as a whole, because it's also like, well, all these stocks, like money's just flowing into big names, and it's what do they call it? The S&P 7 right now, or the S&P 8 that's like carrying everything. It's an incredible thing, and it's pretty unique, right? I mean, I'm sure there's been other times in history it might have happened, but I don't know. The way it's happening now, it's like also just the big dogs just keep getting bigger, and it just makes it harder for smaller companies to compete, especially when it's hard to take on debt to grow your business. So there's just a multitude of crazy things going on with the economy. But also keep in mind, it's not like I was alive 30 years ago or watching economics 10, 20 years ago, like other individuals out there. So there's a lot of perspectives I understand that I don't have. So that's why I'm also like, just trying to always read things and see perspective. So I also understand, like, I'm saying it from a perspective of never really seeing a true like difficult time. Like I didn't see what was happening 2008, 2009, 2010, where a lot of people were losing their jobs and just struggling day to day because I was just a kid. I didn't truly understand what's going on. I understand my parents are like, gas is insane right now. This is the highest it's ever been. And I was like, wow. And I was a stupid kid. I was like, wow, it's only 4.50 versus like $3 or whatever it used to be. I guess life is just so expensive that even the difference between $4.50 to 3.50, I don't know, it's just $1. It doesn't seem like that much. But then I realized over time, because I was an idiot, I was like, oh, it's per gallon. Duh. Like, I mean, I was like little when I thought that. But, or I guess I was 8. I don't know. I just didn't put two and two together. I didn't like make it work in my head, but I was just like a silly kid like that. I was like, oh, now that makes a lot more sense. But green candles, Theron, that's what it's all about, right? Who doesn't like a green candle? But let's think we should jump to the numbers next, right? And I gotta keep building out the Evernote and exact. Again, if anybody has any questions for me to ask my grandfather, who worked on Wall Street, I'm gonna do an interview with him by the end of the summer, whenever it may be. I'm gonna set it up. I'm gonna meet up with him. My brother's gonna come with me. We're gonna record it, full podcast style, different angles. We'll drop clips, whole thing. So. And my grandpa's a character. He's got character for sure. So I think you guys will really enjoy it. So if anybody has any questions, even in the future, before I drop it, let me know, and I'll definitely try and ask him or see if I can make it work in some way, especially if it's relevant. But let's look at the numbers. I feel like this is a good time to do that. Let's see. Do you really see a 5x from Bitcoin to 150K? Freshmaker, I think it's possible in 2024. I don't think it'll be by the end of this year. I think the Bitcoin halving has historically been very bullish. I thought I had it pulled up here. But I also understand there's so many like X factors now with regulation being a challenge and a lot of different things going on that it's not just as simple as this chart makes it look at, right? Oh, every time the Bitcoin halves, it runs after, right? Oh, easy peasy. Millionaires, right? No, I know it's not that simple, but also the fact it's deflationary in a highly inflationary world, that's what kind of has my perspective. And how I think it kind of gains adoption is potentially, right? I think it's more like, okay, well, it's not that I necessarily want Bitcoin. It's maybe over the next few years, people start to realize it just becomes the normal where prices of things just go up 25, 30, 40%, which I hope this isn't the case, by the way, but this is unfortunately what I think is kind of going to happen just because of the nature of the inflation right now. And I don't think the actual reported inflation is the actual inflation of a lot of items. So if the prices of things continue to go up, anybody who's trying to save money thinks to himself like, shit, if I save this money for like 2 or 3 years, and then I go to start buying groceries, or not groceries, that's a good example. I go to start buying this or that, then suddenly it costs way more
than it would have a couple of years back. And it's like people start to realize their dollar's losing value without truly understanding the dollar's losing the value. People just like, wait a minute, how come things always cost more next year? Why would it's not as incentivizing to save money. And also we're in a time where people are having difficulty saving money. So I think that pushes more people to like, okay, well, I need some kind of alternative asset to hold my wealth. And then, yeah, maybe I need to kind of take a chance because shit, everything's going to cost more anyway, right? So I don't want to keep my dollars. So, and I also want to be clear, I don't think the Bitcoin is going to come in and replace the US dollar, right? Like, oh, this is the end of the dollar. We're going to be using the Apple Wallet to pay in Bitcoin. I don't think it's going to be like that at all. I think the dollar, is still going to be dominant. I know this brick stuff is coming on, which I've thought like, wow, this is kind of crazy, and it is. But at the same time, I don't think the dollar can be dethroned because again, if they're going to build it on gold, then yeah, sure, it's backed by something, but there's still other flaws. And I had a second point I was going to make on it, but I don't know. That's just kind of some of my thoughts there. But I mean, Ethereum has far more utility and truly deflationary. If you want to look up ultrasound money, all right, good luck, fresh maker. I'm going to write that down. Let's see. Ultrasound money. Yeah, the thing is, I'm definitely I own a little bit of Ethereum, full disclosure, and I do think Ethereum has potential as well. I just feel like one, Ethereum, there's a lot more utility with the blockchain or the network, how it can be built upon, and the smart contracts. Like, hey, when this happens, this automatically happens. Whereas Bitcoin's like being approved by the transactions, like that's the mining. I feel like I understand that better. And then also, I think if Ethereum succeeds, like the blockchain succeeds, it doesn't matter about the price of Ethereum. Like, yes, it'll also probably run with Bitcoin. It doesn't matter as much because I'm heavily invested in GameStop that is utilizing the blockchain in shape or form. Like, not necessarily like Ethereum specifically, but like building on Loopring and a lot of these other chains, and it seems like everything they're doing is multi-chain, is built upon Ethereum. And I feel like that's the base layer and that's important. So yeah, I don't know. That's kind of going off it, but LOL, I just buy, DRS, and hold. Hey, Brett, that's what it's all about. Know thyself. Know thyself. Can't go wrong with that, right? And don't get me wrong, I'm still picking up GameStop shares here and there. I'd kind of slowed down for a bit, and then recently just started picking them up again. So I'm like, you know what? Got some cash, and I think that's truly what it's about, being an investor. But also, I think something that is starting to become on my radar is dividend stocks, because and stocks I think that can offer a dividend in the future, like potentially Palantir, but I think Palantir is a long way away from that. And now Palantir's run up a lot, so I don't know if there's necessarily an opportunity there. And where I see more of opportunities is in dividend stocks that have a little bit of growth potential, or just wanting, or I also want to acquire, some S&P, just owning again assets as a whole. And GameStop is still going to be by far my largest holding, and I think it has the most upside. But also, I'm really trying to build assets and cash flow. So I'm not really looking at Palantir, or if I do see another growth stock, like I better absolutely freaking love it and think it's going to way out return the S&P, which I think GameStop will in the long term. Hence why I'm buying a lot into it. And then Pepsi, right, for example, it's historically outperformed on a long-term basis, but at least I'm getting this dividend, right? And this dividend, I don't necessarily have to reinvest it back in. I can then maybe reinvest it into GameStop and really just start to manage and again acquire assets. That's kind of where my head's at. But still right now, like I'm still mainly GameStop, still mainly going to talk about that, but I'm still exploring like other options and seeing different things. But also I'm not trying, you'll never catch me trying to get the next GameStop or the next big play. You're going to catch me start to look at the big picture and trying to own assets, because that's just where I'm going. But what up, family? Abe, good to see you, man. Good to see you. Hope you're doing well. But yeah, also talking about my grandpa before, I was saying I'm going to ask him questions, but he's big on dividend stocks. He's been and also that's why I bring up Pepsi. He's been a really, really long time Pepsi holder. It was either his father or grandfather that passed him shares. To give you perspective, my grandfather. So the family name has owned a lot of Pepsi shares for a long time. and it's split. It's raised their dividends. They bought back a lot of stock, and this is really what it means to hold the stock forever. And if this is the route GameStop can go down in the long term, with only an $8 billion market cap, there's so much upside, right? And I think dividends are really important because that makes people willing to hold forever. And I think they're really far from that, and they really have to be big time thriving, completely rocking and rolling before they can do dividends, right? Because otherwise it makes more sense to invest in your growth so you can offer a fair dividend later. You could buy back a significant amount of stock when your share price is down, all those different things, right? And also there's always unforeseen tailwinds. So really, with a guy like Ryan Cohen at the head of things, I think he has that potential to take GameStop to this type of level. And this is something I've kind of understood from watching Morance's content a lot. So definitely shout out to him. But also, just looking at these companies and comparing a lot of other, just retail stocks, like for example, Nordstrom, which he's also involved in. Let me see, is 3.77% dividend. So part of their appeal is dividends because, yeah, maybe the stock price doesn't perform that well, but anybody who's held it all this time has been at least collecting a lot of dividends. And I think also Ryan Cohen sees potential here, but whatever. That's not the point of this. But the point is there are names similar to GameStop that are kind of mostly retail. And I know GameStop's expanding with blah, 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 expanding beyond retail, right? And beyond e-commerce. But it is always going to be a core part of their business model. And I think when that's the case, it makes a lot of sense to do dividends down the line. But again, you have to be in great financial shape. And they're not there yet. I think they are in great financial shape, but they're not at the point at all where they're going to do dividends. Ryan Cohen is our dad, lol. It seems to be that way, Brett. It really does. But, also, I do own 2.1 shares of Nordstrom, and I'm debating selling them because the reason I bought them is to see between book and plan. I bought one plan at one point, whatever plan, and then bought one book, and I turned on dividend reinvestment, and I was like, well, how could a book one automatically dividend reinvest? And then it did. Like, oh, well, they're just in the same account. It doesn't matter. So I was just doing it for the purpose of seeing that because when I had read, about book versus plan, and that was part of the argument, I wanted to see perspective. So either I'm just going to keep it and then start having the dividends sent to me by check, or I don't have to see computer shares staying. I don't know. Because to me, Nordstrom's not my investment, and I don't plan on putting any more in. But again, I'm talking about assets. Maybe I'll just keep my 2 point whatever shares forever and just collect my little dividend, right? Or I just sell it and throw it in GameStop. I don't know. I'll have to see. But again, talking about assets. Nordstrom used to be my biggest dividend stock. Then they paused them during COVID. I missed it and they reinstate them. I'm John Lacey. Thank you for being here, brother. Good to see you, man. But yes, they did reinstate it. I believe so, or maybe I'm completely goofing right now. I'd have to check on that actually, but I believe they have now. I think they had it paused for a little while. I own some Gladstone Commercial and Gladstone Capital. They both paid monthly dividend around 10% annually. No financial advice. It's interesting. Freshman, I'll have to check on that one also. Was it Gladstone Capital? I'm always again interested in reading stuff. But yeah, again, not that Nordstrom's any kind of dividend monster or something like that. I'm definitely not trying to suggest that. But another stock that's kind of, I thought was interesting recently, Texas Instruments. They've been growing their dividend for a long time. They've bought back a ton of stock in this period. That's what a big part of this is. And they continue to grow their revenue, generally strong balance sheet. And when I'm looking at ginormous companies like this with debt and just a massive balance sheet, I'm looking at what is their debt interest rate? Like, what are they raising capital at? And their debt is priced anywhere from like 1% up to 5%. But all their money market accounts pay more, but also they don't have large insider interest. But they've been raised. And also when I'm looking at dividends, I'm looking for any company that's raising dividends by more than like 7 or 8% or 10% even, because inflation, right? But again, I'm not saying I'm not buying up like Texas Instruments or something like that right now. I'm just looking at various names and perspectives. IEP went crazy today. Let me check that out. Let's see. And also, I've read about stocks for a while. I do want to clarify. It's not like I just invested in GameStop and it become suddenly just knowledgeable and everything. I've always read about things in the past, but I've never felt confident about talking really truly like I understand something the way I do with GameStop. And it's kind of set a standard for myself now where I feel like I'm at that level where I'm like, okay, I have a massive position in this company I absolutely love, and this is going to be my biggest position. But again, asset perspective and just growing myself as an individual, growing Tetron and the assets it acquires. And I'm okay with making mistakes along the way. That's the thing, too. And I also feel like I'm fortunate enough to still be young and recognizing this right now where I can make some mistakes and it's going to be okay and benefit me more in the future, and knowledge that I can pass on to friends, family, kids, all that stuff, right? So, some good coffee. But for those of you guys that didn't see, the Tetron Invest GME sign, got to alter this, get this in the setup soon. One thing is the letters move a little, but we're chilling, so it's got to be kind of still. Then I got this during Pro Week. Had to take advantage. Got a couple more. I have C3PO and an Ewok over there. But yeah, I think I have to always do coffee before the stream. I feel like I'm just rocking and rolling when I have coffee. Like, but at the same time, I don't want to fiend caffeine. But at the same time, I don't know. I feel like it just gets me to that next level. Like, it's a miracle drug. Tetron Invest has been preaching Bitcoin since 2016. No cap. Yeah, no, I'm John Lacey. You know, we've known each other for a long ass time. I know this guy since high school, and even in high school, I this guy remembers. I was trading. I was fucking around. I didn't know what I was doing, but I was like, this is interesting. And I would have been smart, right? And this is also what I mean about learning lessons. If I had held Bitcoin, if what I when I talk about, if I just bought and held in 2016 and never let go, it was probably more like 2017 more so. I think I was starting to catch the run up. I would just be in great shape right now, right? And that would have been a great investment. But also, I don't think there's any way I would have not sold after everything that happened over the past few years, right? Or prior to this huge dip. But I was also, just trading. Like, I made a ton on the Litecoin run up. It was crazy. I can show you actually specifically. Yeah, IEP did make a big bounce back. I didn't even actually fully check it. Let me go back, or I just kind of skimmed it. But this jump right here. Oh no, was this it? No, this one. Ooh. Here. I remember it was right before Christmas break. I was so fired up. And in here, I bought when it started. I was like, oh, technicals, this or whatever. And people are like, what are you doing? I'm like, oh, I'm trading cryptocurrencies. Go to the store, buy a Visa card, go online, whoop, buy some crypto, right? And because things were way different in onboarding to crypto back then. There was really little regulation. And how I actually even got started and found out about Bitcoin was trying to play Bitcoin poker. Which, of course, there's never any real money involved in any of this. No, no. Everything I'm saying, haha, I'm joking. I would have never done those things. So I bought Litecoin, and then I was like, it started going up like, yo, it went up 25%. I'm going to just sell this, take a profit. It's like, sorry, your coins are on hold for 7 days because your ACH is pending and you did an instant buy or something. Like, what? And I was like, no, no. And then it just kept going up. And I was like, oh my God, this is crazy. I literally can't even sell it. And it just keeps going up. So, all right, like, I'll freaking just keep holding this. And then I sold it a week later for legit a 200% gain. My mind was blown. I said, what the hell is this? I made I think it went from like 50 to like 200 or something. Maybe I got out at like 150, or the spike was crazy. See, in this 1 week, or maybe it was here to here where it went to 150. I don't remember exactly, right? But it was insane. Just a completely different time in crypto. And in high school, I was like, what is this? And I feel like individuals investing really blew up in this period, right? Kind of everything that happened with GameStop was known to be the time when everything was really at its peak, right? Or I should say peak of individuals just messing around with stocks. I know a lot of people that were getting into it and getting interested, and then kind of digressed away. They're like, it's not for me, or whatever. This GameStop thing never came back, and you said it was gonna, right? So, or you've been talking about it for a long ass time, whatever. But I think Peruvian Bull actually tweeted about this today, and again, I'm really interested in some of his work. Not that I necessarily agree with everything. How we're in a situation now where, as kind of was saying before, how the wealth classes are spreading out in the sense you need to make a lot more. year over year or over time to jump from this class to this class because there's just more money out there as a whole. So you need to jump further to get to the next class. So with that being the case, more and more people are incentivized to take risk or go for the higher risk, higher return opportunity because they're like, shit, it's so hard to climb out of here anyway, if that makes sense. So let me see the news on IEP. Stock surge after founder untangles loans from SharePlace. Let's see. Soar after Carl Icahn and bank strike deal on loans. Interesting. Restructures personal loan after short seller attack. It's a multi-billion-dollar personal loan he took against his shares on his investment firm Icahn Enterprise after short seller report about his debts caused the stock price to slump. Let's see. But obviously, it seems like bullish in some shape or form. But yeah, I don't know. I don't know how I feel about that Hindenburg thing, and kind of haven't been keeping an eye on Carl Icahn anymore. I watched the HBO Max thing on him. It was pretty interesting. On his history, he's been around for a long time, and then his whole feud with Bill Ackman of Herbalife. I don't know if you know that guy. He was calling it a pyramid scheme. I remember actually when I was first interested in the stock, like one of the early stories I was following was this, and so I actually knew Carl Icahn, to better say what I'm saying. I knew of him, but I forgot, right? I remembered Bill Ackman of Herbalife, and oh no. Shit, am I completely mixing things up? But I'm pretty sure. Was it Bill Ackman that called it a scam? And then Carl Icahn was bullish on it, but I'm pretty sure he went at it with him. I can't remember exactly, but I realized he was involved in that situation. Someone correct me if I'm wrong. I believe he was. And when I found out about him again, or read up on him again, and watched the thing, I'm like, oh yeah, that was that guy that I read about a long ass time ago. I didn't even realize it, but yeah, cheers all around in the chat. Multi-billion-dollar loan he took against the shares of investment firm Icahn Enterprise after a short seller report about his debts caused his stock price to slump. Slump. Sorry, I was checking the time at the same time. Slump. Icahn Enterprises said on Monday that the octogenarian billionaire had agreed with 5 large banks to convert margin debt into a 3-year term loan. The new terms require him to pledge virtually all of his Icahn Enterprises stock as collateral, 95% up from 60% of his stake now, and make a $500 million principal payment before September 1st. The amendment underscores the deep financial pressure Icahn has faced since Hindenburg Research published a report on his borrowing in May. The short seller's report said Icahn was vulnerable to margin calls, forcing him to pledge more shares or sell stock if Icahn Enterprises' share price fell. Stock was down more than 50% following the report. Icahn owns about 85% of Icahn Enterprises, a conglomerate spinning, refining, and car parts businesses, which also holds a portfolio of hedge fund style investments that he manages. The reworked loan take out some provisions tied to the company's share price, replacing them with a commitment to pledge more collateral only if Icahn Enterprises' net asset value falls below a predetermined loan-to-value ratio. Its shares rose more than 13% in early trading on Monday after news of the restructuring. So this is actually a really interesting story, and that article actually, I hate to say it, but it actually kind of explained it decently well. But it is interesting how he's borrowing against it, and I've been listening a little bit to Rich Dad Poor Dad. You know that guy, Robert Kiyosaki, where he's like, you know how they buy it? I don't buy with money. I buy it with debt. Like he always does like that. Like, use debt. I can't do a good impression of him, but it's funny how he says it. And like I always thought it was like goofy. Like I don't really understand, but like I kind of really am starting to understand it. Like I always generally understood it. Like you don't want to just upfront everything, and there's write-offs and various things, but this is really interesting where it's like, did he get too greedy, and is this why he really had to restructure it? And I don't know the full details of the story, but it is an interesting story, and it does, I would say, tie into the whole story of executive compensation and just things that go on Wall Street. And yeah, it's truly a vicious place, I would say, Wall Street, or just the stock market as a whole, where you got to be ready for anything and everything, right? Like as a hedge fund manager, look what's happened to Gabe Plotkin, right? His whole thing blew up in his face. Yeah, you have to just understand there's forces that come in that you just don't expect sometime. And maybe Icon just didn't see this coming. And yeah, I don't know, because if it's not like, oh, he's running a scam, it's that he's borrowing heavy upon it. But at the same time, by him, like on the contrary, and again, I don't know the story as a whole, or I haven't been in-depthly following it. On the contrary, Hindenburg has the ability to say this, and then look, it's down 50% following the report. They made a fuck ton of money on this because they came out with that report. Anytime Hindenburg comes out with a report, they're like the short seller guys, and maybe that's someone who I have to look into. Maybe that's a future brands connect the dots, right? But at the same time, they said that, and then look, they were able to tank the stock. So it's just the way she goes, right? It's pretty crazy. But the debt to GDP, yeah, it just quickly touch on this again. The interest is going to keep going up, and that concerns me considering our percentage of public debt to GDP is still 118% right now. Like, that's nuts. So, again, there's things I don't fully understand. I can't quite grasp, but it is what it is, right? And that's just some general economic thoughts on everything. I think, actually now probably would be a good time to hop in and put together the notes for Diana as her executive compensation, and we can compare it to Neer Patel. And also, I included their images of their LinkedIn's because director, product management at GameStop, and he also has the rocket emoji in there, and he has the background of GameStop. I also like that Diana has GameStop right there. So I think that's pretty cool. But can I? How do I get rid of this? Boom. Okay. So let's do this here. And let's pull up her offer letter. So, I figured, this is kind of all I had for today. Might as well just keep the stream going. Like, instead of doing this later, just commit right now, take care of it. So, new base salary. And she was signed, remember, a year earlier. So, we're going to duplicate this. And also, this is a little insider of how Tetron does research. And I could reorganize it more later. So, this is going to be Diana Sade Jaje. Is that how you say it? I'm not too sure. CFO. And then we have. Okay. So, place this here. Put this here. Whoa. No. Goon. Whoa. Okay. So, same deal. 200,000. Be eligible to transformation bonuses, restricted shares and stock units, and restricted long-term incentive cash in accordance with the vesting and other terms of award agreements that have been issued to you on or prior to the date hereof. For avoidance of doubt, nothing in this letter shall change, eliminate, or modify any terms of those agreements, which are summarized below. Total of 1.965 million transformational bonuses are being paid biweekly or over 2 years, which began on August 1st, 2021. So August 2023 is coming up. So that's just a little bit less expenses for the company coming up. So that's kind of something to note there, just upon a glance. Bonuses are paid bi-weekly installments as follows. In year one, you receive a bi-weekly installment of $44,086.54 a month. And year two, bi-weekly of $31,490.38 a month. So first we have that here, and then with the sign-on bonus, so hers is a little less. I will do 1.965 million. And then we have 44,086.54 bi-weekly for year one. And then we have 31,490.38 bi-weekly for year two. All right. Granted restricted stock units. So let's get to that here. Or she has a couple different things, but let's hit the chat. I've been individual retail investor. This is the way, Brett. Fresh maker, yes sir. Cheers. Rocket, bro. That's me. I'm the bro. But on March 1st, 2021, you were granted 2,949 restricted shares of the company's Class A common stock. The March 2021 Equity Award vests in equal installments on the first 3 anniversaries of the grant date, subject to your continuous service through the vesting date. So I believe that's the Transformation Award. Let me get to the restricted stock units, or let me read through it all and see the best way to summarize it. This is why I watch this channel. Appreciate you, Brett. I appreciate you. Thank you. I just do my thing, man. That's really all I can do. Thank you, guys. Really, thank you so much for being here. But in year 2, you'll see bi-weekly. Okay, I got that. October 1st, 2021, you were granted 16,859 restricted stock units of the company's Class A common stock. October 2021 equity award will vest as follows: 5%, 15, 20%, 36, 30, 36, 42, and 48 months. Okay, so again, hugely weighted towards the back 3 years of the 5-year equity award. On June 9th, 2020, you were granted 350,000 of restricted long-term incentive cash. 2/3 of such award is previously vested, and the last third of such reward will vest on the 3rd anniversary of the grant date, subject to a continuous service through such date. So, as far as I'm aware, this should be done, right? Because June 2023. I'm not sure if 2/3 is already vested, the 3rd anniversary, wouldn't that have just been 2021? But this offers in 2022, so it must. Oh, on June 9th. Okay, so this final third is about to be paid in June 2023. So I don't think that's necessary to include on here, but let's try and sort this out here. So the March 2021 equity award vests in equal installments over the first 3 anniversaries. So we got to add a whole kind of second version of this here. Let's see. I'm going to have to structure this one differently, but just figure it out as we go. March 1st, 2021. Granted 2,949. Whoa. Restricted shares. Vested over 3 years. So that's just going to be, it's the phone, need a calculator. Or just pull a calculator up on the screen so you guys can follow along. Gotta keep engagement up, of course. Yeah, I love Mr. Beast. Quick random side note. The guy's awesome. Like, he really just is, in my opinion. And also just, you can learn a lot from him about YouTube. So I do find that very fascinating. And I really do try and pay attention to what he says. So 183 shares granted annually over 3 years. And then I'm gonna have to go back next and see what exactly the prices were that it's granting at, because that's definitely interesting. And it's interesting here how it's just shares. It's not like a dollar amount that it's based on, like Near Patel's. So that's interesting. On June 9th, 2020. Oh, okay, we already got that. So that's done now. On October 1st, 2021, you were granted 16,859 restricted stock units of the company's common stock. The October 2021 equity award will vest as follows. Okay, so this is the next part. So 33.33% per year. And now we have here October 1st, 2021, granted 16,859 restricted. I don't know why I always do capitals. I love capital letters in the first like letter, and I don't care. Like you always see in my titles, and everything. Like it just looks bad if it's not the first letter's not caps, but all caps, too much, too much. Restricted shares or stock units, whatever, same idea. Vested over 5-year period, variously. And then eventually, the long term, guys, is there'll be a Tetron website where you guys could go see everything I'm doing and just putting together an information. It's just more documentation, but again, down the line here. So, okay, we have that. So year one is 2021, and we're going to have to get the percentages, and this is going to be in shares, not dollars. So we're going to have to get, let's clear this out, 0.5, whoa, no, 0.05 times 16,859. So that's about 843 shares, right? Or we'll keep the exact number for now, then we can round it later. And that's 1, 2 spaces. Okay, that's 5%. And again, guys, what I'm really seeing here is the progression of each year that the vesting amount becomes greater. Or, oh, wait, this is not fair. Okay, let's just keep going and then we'll sort it out. So, year two. And then also I should put here, this would be 2021 through 21, 22, 21, 21, 20, 21, 22, 23. So, oh wait. Oh yeah, so, okay. She keeps getting promoted. That's kind of why there's a lot of different stock units, or that's what it seems like here. Report. Okay. And also, I'm trying to think of 17 things at once. I think that's why I'm throwing myself off. So I'm just going to keep going here. Because also, guys, this is how I research, like, on my own. I'm like, oh, wait, what about that? What about that? Oh, that time. My brain starts spinning. Like, okay, so I'll just leave that there for now. But let's get back to the main point. So then if it's 15%, it would clear this out. And we're going to do 0.5, 0.15 times 16,859. That's this many shares, which I guess theoretically, you know, she can get fractional shares, right? Why not? Keep those shares. So 5%, and then 15% on the second anniversary. So this would. Oh, okay. So this is actually, because it's being granted in 2021. It says you were granted the October 2021 Equity Award will vest as follows. On the first anniversary, that's the first vesting date. So this will be 2022, or it'd be October 2022, or sheet, year one, October 2022. Year two, October 2023, coming up, 15%. And then this is where it gets interesting. 20% on each of the dates that are 30, 36, 42, and 48 months away. So then it starts going on a 6-month basis. So, okay. Year three, November, December, January, February, March, April. Right? Oh, wait, or do I count the actual month? All right, whatever. It's for rough estimates, so it's okay. 2024, it's another 20% of shares. So 24 and 25 is 2024 and 2025 is when she's going to get a lot of her shares granted. And also keep in mind, the grant date is the vest value. Oh, see, and then also we have more here in addition with the promotion because she was promoted. And then again, another incentive. So basically, she's probably not going anywhere, right? And what I'm kind of piecing together here, oh, gotta free up storage soon. What I'm piecing together as I'm reading through this and just thinking out loud and just thinking as I go, they're continuing, to whoever's the best, they're keeping, and they're like, hey, yeah, you're doing more work than everyone else, and like, yeah, you're sticking around as maybe we're letting this person go, and now you're kind of consuming their role, and maybe you have someone who's not quite that role, but yeah, they're kind of filling in things, but really you're the manager of that thing now, kind of consolidating within. You could save a little bit cost like that, and in the sense like you don't have to hire a whole other person and a whole nother everything. You can give more to the same person because they have that hardworking mentality that we got to get this at the highest level it can be. And I think, of course, you don't want to see them letting people go like Matt Furlong or go through the progressions they go through sometimes where it's like, oh my God, they fired this person, or oh my God, they got rid of that person, right? Before she was promoted to CFO, they had another CFO in there that I don't know if they parted ways. I forgot off the top of my head exactly what happened, but evidently she keeps getting more incentives. And I don't think you keep offering more incentives and promotions to somebody unless there's more potential within them. And I think if you I would rather have 5 spectacular employees instead of 10 great employees, if that makes sense. So I think that's really where, when you have a guy like Ryan Cohen, and also he probably works, it's easier to manage from his perspective a smaller team and more people that understand where your head's at. So that's kind of my perspective, and I get that perspective from working at places. Like, I've worked in an office and I've worked as a assistant manager working the sales floor management, right? So I've seen different sides of things, and not that that's just black and white, like how it is for everything, and like, oh yeah, it's just how GameStop is, but it really matters who's leading things, because the people, like, whether it's Marshall's or it's my office job, who's managing, right? It's always been like how the things are managed or who you're reporting to. Like, if you respect them, like, you're going to want to do a better job. And if you see them, like any manager I've had, I see them work, I want to work harder. So I'm like, okay, I can do this too. Like, they're good to me and they're working their ass off. I'm not going to try my best. Why would I not try my best here? So also, this is on a much bigger scale. I'm just like an average guy working an average job, right? So it's a little bit different, but that's just some kind of perspective there. But let's keep going now that I've digressed for a bit there. So let's get the 20% number. So 0.2 times 16,859, 3,371.8 shares. That's a lot of shares. I'd love to have that many one day. 20%. So we gotta paste this down and just adjust. Year 3, October 24, April 2025. This is gonna be October 2025. So she's going to be getting bonuses throughout 2025, and then we have another one here. Which, should we include the first one now that I'd skipped over? Because this would be, or this one. Oh, now I keep mixing myself up. But bonus paid bi-weekly. Installments. Yes, okay, I got that. Yes, okay, so we will leave this out because this is done. Right? You were granted 350,000. 2/3 of such has already been previously vested. And you'll let the last third of such reward will vest on the 3rd anniversary of the grant date. So it's just happening now. And that's just, again, a small amount of money. So I don't think it's really worth accounting for here. But in addition to the above, and in connection with the promotion, on July 11th, 2021, just copying this, get the bullet point. Oh, never mind, that didn't work. See, still learning how to use this. Bullet point, boom. Okay, I don't need this text. Back to split. Okay. And we have June 9th, 2020. Oh, wait. Damn it. July 11th, 2022. 2002. Granted. Restricted stock. Let's see, $1 million by the average closing price of the past 30 days preceding the grant date. Additional equity award will vest on July 1st, 2023, subject to continuous service through this date, which has happened. So it was granted. It's going to be granted in this earnings report, if I'm reading this correctly. Let's see. Issued at how do I type this? Issued stock $1 million worth. Paid on July 1st, 2023. Oh, the additional. Let's see. Oh, this is the date of her promotion. So she's going to be granted it on this date. Somebody correct me if I'm wrong here, please, but that's what I'm starting to figure out. July 1st, 2023 is the date she's getting granted 1 million shares worth. It's in connection to the promotion because she already has this vesting plan. So it'll be subject to your continuous employment through that date. Average closing. See, this is where bamboozled. Let's get this in simpler terms. Again, guys, ChatGPT, you don't use it to pick stocks or something weird like that, or what's the next big Apple or whatever. You use it to just collect and dissect information. That's what I think, at least. And Bard as well is a good tool. I use that sometimes too, but I mostly like GPT. I don't know, just because when I started with it, and I just use it for some general stuff. I don't know. In addition to what was mentioned earlier, there's a benefit you'll receive on July 1st. Oh, July 11th. It's funny. It tells me as if I'm Diana. I think that's kind of funny. I'd love to be in Diana's shoes working for GameStop. On July 11th, 2022, you will be given a certain number of restricted stock units of the company's common stock. The number of units will be determined by dividing $1 million by the average closing price of the company's common stock for the 30 trading days leading up to July 11th, 2022. This is called the Additional Equity Award. The Additional Equity Awards will become yours on July 1st, 2023, as long as you continue to work up until that date. Okay. In order to officially document the equity award, a separate agreement will be prepared for you. This agreement will have more details of commissions and conditions, but they will not contradict what has been mentioned earlier. You will receive this agreement and grant date after the grant date, which is July 11th, 2022. During your live stream with Morantz, I asked him what his deal was with Richard Noon. He seems like pretty down-to-earth kind of guy and provides helpful content. Says, I don't know the truth. No idea what he's referring to, but I hope you can address it if he's in the chat. Mouvier, thank you for being here. I don't think he's here right now in the chat, and I think his perspective was the shareholder letter he disagreed with. I don't fully know, and of course I don't want to speak for him, so I'm not too sure. For me, I don't want to say I have like an opinion, or I think he's a pretty down to earth guy, and I like some of his stuff. I don't necessarily agree with everything. Like personally, I'm not sure exactly how I felt about the shareholder letter, so I wasn't like involved in that in any which way, or I didn't even really follow it at that time, and like I don't always keep up with everything. Like I'm not always watching his content, but I do like it on occasion. I don't think it's bad. I think there's interesting information he presents, and it's just another source, another perspective, another individual talking about GameStop at the end of the day. So yeah. Let's get back to this. In addition to what was mentioned earlier, there's an additional benefit you receive. So $1 million divided by the closing price divided by closing price. For this one, I have to put a star next to it. I'm going to have to look at it with a fresh mind another day just to make sure. Days leading up to, I think it's after. Preceding such grant date. See, but this is also what I like about ChatGPT. Be like, if it is proceeding, wouldn't that mean when the 30 trading day average is the following 30 days after July 11, 2022? Let's see what it says to that. You are correct. The grant is proceeding. See, this is also where you have to check it. See, it didn't perfectly explain it there. Like, hey, wait a minute, that doesn't make sense. And again, this is why, to me, I call it the assistant or like a research tool, because I feel like I can bounce ideas off it. And then also, I have to stay alert because I have to catch that and be like, that's not what I just read though, but I wanted to explain simpler. So that's where you have to kind of, keep an eye on things like that. So 30 trading days after July 11th by average closing stock price. 30 days, 30 days after July 11th, 2022. So again, something else that will be showing up in expenses, and another expense that won't be there for the same quarter next year. Let's see. Hope everything is going well with you otherwise. Yes, no move here. I've been pretty good, just like anyone else out there. I fall off my horse sometimes, but I just get back on and I keep riding, right? So just living life and just also trying to evolve as a person, because I don't also I don't want to say it like this. I'm 23, so I feel like there's still so much I have to learn about life and figure out in just my day to day. And I really try not to use social media too much because I feel like it's just so toxic. But at the same time, what I'm trying to do is talk on social media, right? So it's a tough thing I try and balance, and I just try and anything else in like life, right? It's like you just gotta have balance, otherwise it's too much of anything's not good, right? And that's just how it is. But at the same time, when you love something, you should go all in on it. And I love what I'm doing on YouTube, so why would I not try and go all in on it? So that's why I got to keep committing here. But I think now is a good time since I did this a little bit. Let's look at some of the numbers. And then, yeah, so actually, no, what we should do first is we can pull the data. All right, here we go. Data. I'm a data scraper. No, I'm just kidding. But actually, I don't know if I can do this. Historical data. I can look. Let's see. Start date. July 1st, 2022. Up until, let's just say like the end of May. Pretty much. And then I can just count 35. Okay. Oh, very interesting. And that is in the period of the split. So, if it was 1,000,000 divided by, let's see. Wish there's a great way to. What is that notification I'm getting? Oh, I don't even know why it's recording. But it's fine. I'm still live, right? Okay, yeah, all is well. All is well. But I don't want to have to do this really quick, do I? Why does it not want to go in there? Okay. Thank you. Plus 30.06. Oh, this is going to take a while, though. But also I have to count 30. Oh, I think it's because my hotkey is... Oh my god. How do you get to settings? Okay, well, I can't do it. Oh my god, what is the hotkey? I don't even know what the recording hotkey is. I must be recording so much. Wow, okay. See, guys, lots to learn. I must be recording so many random like clips all the time. I literally don't even know it. But for now, let's get a rough estimate because I don't think you guys want to watch me sit here and calculate completely. So 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. So that's roughly from $40 to 30, right? Sort of towards the end, it really starts to run. So let's say 35. I think that's a fair number. Maybe 34 just because it's a little lower, but then it also has a big jump here. So let's just do flat 35 for simplicity reasons. So 1 million divided by $35. Well, if I do $35, it'll not give it to me in shares, it'll give me in dollars. Oh, well, I guess it just assumed. Or it heard me. I don't know. Maybe they're listening. So that's that many shares. That's a lot. Let's get that over here. $35 rough average. Let's see. At $35 rough average equates to that many shares. Whoa. It's in ghost font. Boom. That's a lot of shares. That is a huge raise, right, compared to the October 2021 grant. And then also, let's try and see what was her position prior to. Please offer your promotion to the Chief Financial Officer of GameStop Corp. As effectively, you report to the Chief Executive Officer at the time, Matt Furlong. I do want to see what she was before, or is it on her link to? I don't want to pull it up right here. Oh, let's see. Experience spans from companies revenues of 30 million to 20 billion, where I gained valuable perspectives on IPO, V, and ELF. Wow, she was there for Visa's IPO and ELF. That's awesome. Activism in GME and industries ranging from the construction, consumer products, software, technology, retail to telecom, finance services, and network operations. I'm passionate about developing new generations of leaders and creating the digital building blocks for dynamic global organizations. Extensive experience in the following systems: Oracle, SAP, something they signed on, NetSuite, Concur, Kyriba, Coupa, Ariba, Anaplan, supply chain management, Avalara, ADP payroll, and Reval. So I'm familiar, I'd say about 50% of those, so that's interesting. But it's really cool to see that, from what I understand here, this is around when Ryan Cohen really started creating the turnaround. And with that being the case, that becomes the point in time where if she was just, I don't want to say like a regular executive, she wasn't CFO of GameStop at that point in time. So if she was just an executive that's not a CFO, she was also starting to become compensated in shares as part of her payment package, which I think is very nice to see. And also highlights like that this is going on all within the top, not just the board of directors, the CFO, and the COO, right? Which I'm highlighting right here. So that I think really goes a long way. And then just kind of was saying before how it's like all vertically aligned interests. That's just more people that are shareholders and executives. It's not just the board of directors from how I see it. And if you see some evidence that deems that to be wrong, please let me know. But that's how I'm seeing it, especially seeing how when she was promoted, she got even more in shares. And prior to, she already had a plan in place, right? Like this one that's being vested and this one that's just being paid out now. Well, this one's being paid out because of the raise she received. These were the recent filings in accordance to taxes, or who is this? Oh, this is Diana. Oh, are these any of her shares? Do we have it listed here? The 10,000? Or was this 28,000? How many to be sold? Oh, okay, so she's predetermining it. A predetermined sale associated with taxes. That's what this looks like here. Restricted stock units vested under an issuer SA registered plan. Sale represents shares to cover withholding taxes in connection with the vesting of restricted stock units. This sale does not represent a discretionary trade by the reporting person. Okay, so keep in mind, when they're being compensated in shares, they're still being taxed on this amount. They're still being taxed on the value it is granted at, because that is still a form of income, even though it's just not cold hard cash they're getting, or cold hard cash is, I guess, physical cash, but they're not getting dollars, they're getting shares, an asset of the company, part of the company that they work for. So it is still compensation in a sense. So if it's that many being sold, is that associated maybe with this approximate amount of shares? Because after 30 days after July 11th, so this is now July 2023. So this actually looks like this Form 144 filing, which prior to this I wasn't aware of Form 144, or it wasn't something that stuck in my head. I'm sure I've seen one at some point in time, but the whole point in time where I've looked at stocks. But regardless, this could be it. Because again, keep in mind my share estimate right here is based on a $35 rough average of those 30 trading days that I was just looking at, that I have pulled up here. So it's hard to know for sure. But what we do know is she just paid some taxes there based on that. And of course, you don't want to see a sale, but also if you read the specific part of the filing where it says, damn it, this sale does not represent a discretionary trade by the reporting person. So it's sold to cover withholding taxes, which also tax withholding means it's her taxes for 2023. She's having it set aside. So when she files her taxes, it's already paid for, like what she was compensated in terms of the shares, because she's being compensated now for her raise 1 year later from what we're seeing here. So, yep, $1 million worth divided by average closing stock price, around 28.5 thousand shares. Maybe it was like 30,000, maybe it was closer to 25. So this is a good chunk of them, but that's just how taxes go, right? And we don't know her particular tax situation as an individual because she's an individual like everyone else at the end of the day, right? So that's just how it goes. But I think now is a good time. Let's hit the numbers a little bit because, full disclosure, let me get a pillow back here. This chair ain't the best, but it's honest work. Ain't much, but it's honest work. So I haven't looked at the numbers for Q2 in a while because obviously Q2 was almost a full year ago at this point, but that's also why I'm starting to look at it. So full disclosure, as I'm just quickly going through here, I'm not saying like, oh, this is definitely gonna happen, or oh, this is definitely what I think like my official estimate is. This is just kind of recapping, looking back, and starting to think, okay, what could this next quarter look like? And then again, like a next stream or just at some point in time, I'm going to start to compare Q1 over Q2, or look at this past quarter that was just reported. What can we kind of expect in the upcoming quarter? And then also, what can we expect relative to the most recently reported quarter that was, or sorry, the last time it was Q2 being reported in 2022. Now I had a coffee, so I'm going to hit the water real quick. But inventories, so inventories at that point had risen year over year, but for Q1 going to Q2, inventories had dropped. So that is something we may, or hold on one second, make sure I got the right filing. Yes. Okay, because this was filed September, it was for the end of July. Okay, that makes sense. I got bamboozled a second because I was like, wait a minute, it is July. What? Am I looking at the right thing? But yes. So Q2 over Q1, inventories decline. So inventory is always going to fluctuate a little bit, right? You always want to see, I think, a decent amount of inventory, but at the same time, I'd like to think their continuous hands-on management and just vertically aligning things and looking at the data over time that comes in from having things in place that weren't there before, and the new management's able to just observe more and more over time. You can make these small tweaks, which are not going to drastically change your costs, but your costs of goods can just slowly continue to decline. You can make slightly better decisions in terms of merchandising, inventory going to what store, etc., to what distribution center, what region, whatever it may be. So then also you can ideally slim down the amount of inventory you have on hand because you have it efficiently operating and okay, boom, 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 and it's quickly churning because you know this region is selling a lot of this or that. So we better keep getting this amount on this date. So we need a lot here, but it's not selling as much there. So we don't need to fulfill the amount of inventory in this region when this region doesn't sell as much as this particular brand of product, type of product, category of product, whatever it may be, right? It could be anything theoretically. And right, operating lease right of use assets. So those are their leases. they have a lot in 2023 that are expiring, and with a higher interest rate since they're renting, I think we're going to see that number actually go up a little bit. So that will raise the value of the asset, but then that might hurt cash flows a little bit. So, and that's something I might have to kind of brush up on to fully see the relationship with that. But again, just learn as we go here. That's how I rock and roll. But current portion of the long-term debt, that's just how much they're paying for this current year. That number will continue to be low because their only debt is a loan from the French government associated with the pandemic relief. So that's a very low rate. And their total long-term debt continues to go down because they just continue to slowly pay that off. But for GameStop, they're paying that off as slow as they can because keep in mind, they're earning more than 5% now on a money market account or a treasury bill that they're buying from the government and just holding and collecting interest. So they're able to earn money on their cash that's literally more like at a higher interest rate than the interest rate that they owe on their debt. So they could just use the money they collect in interest to be paying that theoretically. And any company that's done that right now is in good shape. And I'll actually give you guys a great example of this real quick. Investor relations, or let's see if it'll come up. Fortinet. All right, it doesn't want to come up. But if you guys want to look up Fortinet, ticker symbol FTNT, cybersecurity company, has never taken debt in their entire life, right? Or entire life as a business. So actually, I'll go to macro trends to show you real quick. Because I saw this and I go, what were they thinking? Like, this seems like a well-managed company. They have 16% insider ownership. It was started by two brothers. I go to myself, well, why on earth would they just take out $1 billion loan, right? So they increased their cash a ton right here, right? That big jump. It's like, well, what did they do? They took on a bunch of debt. So I go, why would they do that? What is this, like private equity, or why did they just start accumulating all this debt going in, right? And it all kind of just came at once, right? It was nothing, and then they just took it on in 2021. But then I looked at what they sold, right? So they sold debt at an interest rate of 0.9%, if I'm not mistaken, or a very, very low rate. So management saw, in my opinion, or this is how I'm perceiving it, they saw that interest rates were going to begin to rapidly rise. So they would be able to benefit from having more cash on their balance sheet and then collect on marketable securities and just strengthen their balance sheet because they can literally pay the interest they're earning on that $1 billion in cash. If that interest rate is higher on a money market account or a treasury bill, which it definitely is right now if they have it in that, which as far as I can tell, cash and cash equivalents, why would you not? You're now earning a difference of 4%. You're collecting 5% on your cash on your balance sheet, and then you could, if you have 1 billion just set aside to specifically just collect 5%, or just you never ever will touch that no matter what. It's just going to sit in cash equivalents in a money market account. You can keep using that 5% to offset the 1% payment, and their debt is even better situation. They're not even making payments right now. It's a balloon payment, which is a balloon debt, some form of balloon debt. Essentially what that means is they're not making interest payments. It balloons, and then they make giant payments that are predetermined at the end. And I don't have the terms like memorized at this point, but to me, that's good debt. And I don't know if anyone heard before, and I was like, oh, that guy, Robert Kiyosaki, Rich Dad, Poor Dad, that's like, they don't buy with their money, they buy it with debt. Like he always says that. I never understood, but this makes sense. Like this is an example of good debt where you can earn more on the capital than the interest you're paying on the debt. And in a high interest rate environment, if you took on debt prior to the rates rising, you are now benefiting from essentially from the Federal Reserve hiking rates, theoretically, right? And this is a very rough explanation, and this is just an example. But by GameStop having their only debt in the form of a very, very low interest payment, that allows them to continue to earn on their cash. And then if they can just get to free cash flow positive consistently, that's what opens the door for acquisitions and I think buying back stock. But I think also until you're really growing and thriving and absolutely certain EPS is going to continue to be positive and free cash flow is going to continue to be positive, Up until then, you might as well just keep stacking up the balance sheet and also the cash on the balance sheet. And also, we're in a period of time where the Fed's like, yeah, we're going to raise rates probably twice more. And there's like murmurs of like, yeah, we're not afraid to do it back-to-back meetings. It's like, that might be more than twice more by the end of this year. And suddenly interest rates are at 5.5%. And then it's like, well, what happens in 2024? And yeah, there's beyond that, who knows, right? And I'm not an economist. I'm not a perfectionist. I'm not a genius, nor am I trying to be. So at least in the next several quarters, though, you can tell, unless something bizarre happens, interest rates are going to be still high. So it just makes sense to me for GameStop to continue to ideally shift towards profitability, but just keep stacking cash. Don't buy back shares quite yet, and just keep building up the balance sheet with a ton of cash. And then maybe you can sign some more deals with some big creators. I'd love to see them bring on like a big time streamer to be associated. I think it would have to be more than just branding, them wearing like a GameStop shirt and like having some kind of GameStop merchandise on their stream. I think there's going to have to be more for the streamer to want to be incentivized. And also, if GameStop's going to make a big payment or spend a large amount on a contract with a creator of some kind, I think there has to be a lot of value on both sides for it to really make sense. Like right now, we have the tweets of Emily. She's like done 2 videos on it now. It's just like some slight marketing, and yes, it's an example of a creator, but I think there's still a lot of other potential connections that can happen, and amongst like streamers or creators on TikTok, social media of any kind, right? The shorts, that's like a huge thing. Like if you can get within shorts, TikToks, reels, whatever every platform calls it, everyone has a swipe thing, right? Right? And everything has a swipe thing. So when that's the case, you have to be in that in some shape or form. And if it's just an ad, everybody swipes by it. But if you have something that catches the eye and you have the creator who's being creative doing that, that's a set example of marketing. But I don't know, I think that's something they can kind of continue to do. I don't know, kind of just rambling at this point, but let's get back to the numbers. So let's look at net sales. So the unfortunate thing is, looking at the past quarter and just extra spending amongst Americans and people around the globe, I mostly keep an eye on the American economy, so I could speak to that more, but credit card debt continues to rise. Savings are not coming back in any which way the way they did during the pandemic, because a lot of people were able to save, they weren't spending, and also the government was putting money in everyone's pockets, right? So the unfortunate situation is that net sales, without this a new avenue of business at this point in time, are likely going to see a slight decline. And I hope I'm wrong. And even I think saying sideways is huge, because you'll see, I think, selling and general administrative costs come lower. I think it was around this number last year, and Q2, I don't, or sorry, I'm thinking of Q1, was it? I'd have to pull it up right now, but you know what? Fuck it, let's just do it. How long does it take? Let's get the last filing. Let's see. Zoom in. Let's see. Oh, well, this is the yearly, so it doesn't have the specific quarter. Oh, yes, it does. I'm stupid. So obviously, 345.7. So let's say GameStop came in flat, but this was 347, right? So 40 million difference. They'd be still at a net loss of like 60 million. But of course, cost of sales could theoretically be a little bit lower if net sales are a little bit lower. So that's, a possibility with the bottom line. And that's just in terms of EPS. But I think overall, if you can just show an improvement year over year, that's number one. But ideally, I would like it to come in, and again, I have to really think about this more before I create like the official estimate. Like last quarter, I had the official estimate, like Tetron estimate of like 1 cent per share. I thought they were just going to turn the corner and become profitability. Evidently, I was wrong, but that's all right. It's all learning experience, right? So roughly what I'm saying here, or just looking at off the dome, let's shoot for negative 40 million, right? Like a swing, I think that'd be a loss of, let's see how much per share he's about. I think that'd be a loss of about 10 cents per share. So that would be a nice improvement year over year. It would be an improvement over 2 years prior, but also keep in mind 2 years prior, sales were a little bit higher, and cost of goods were about the same. Cost of goods were about the same. Selling and general administrative costs actually went up a little bit quarter over quarter, interestingly enough. But I think it's a lot of compensation packages, and the more I'm reading about it and the more I'm understanding them, as time goes on, there's less predetermined granted units. But at the same time, ideally, if the company's growing, they're expanding the team and they're expanding executives. So you would want more incentives to be brought out, but that does raise costs. But again, you're only doing that if you're growing. And kind of how I was talking about before, if you're at a point right now where you have just the best people in place and you've spent these past couple of years figured out who's best for the job, who can fully operate things as best as possible. And I'd rather have, I said before, like instead of 10 great employees, I'd rather have 5 amazing employees that are just on the A game. Or, maybe a better comparison would be like 7 or 8 versus 5, considering, like Matt Furlong being out. He wasn't really replaced. You just kind of had Ryan Cohen assume another role. So that also makes me think, like, maybe this happened in a couple other spots that we don't necessarily publicly see as much. So, and then also, you've seen some members of the blockchain leave and then blockchain team leave, and people have drawn concern about that. But then also with that, a lot of those types of individuals are really to create and then they want to move on to the next thing, just the nature of what they do. So you can think what you want about all that, but I think they really got their executive down. If I had to guess, based on the information I'm talking about out loud and seeing, there's probably a couple other situations where maybe somebody was kind of not the right fit after these past couple of years. They brought him in as part of the turnaround. And then two individuals that are already executives, get a little bump up, but then you kind of allow that person to exit. And maybe their bump up is compensation in shares, in restricted units. Hi friends, Anthony G, what up? Thank you for being here. Just checking on some Q2 numbers. Damn, I can't believe it's 9 o'clock. We're already rocking and rolling almost 2 hours here. Time really does be flying. It's crazy. It's crazy, crazy. But the net loss, so, again, that's kind of what we talked about. But let's go back to the cash flows. Where's that? Where are we at? Okay. So from operating activities, how do we get... Oh, okay, the cash flows is for the 6 months ended. So we should adjust and look at those numbers here. So they have a loss of 266 million at this point. So I guess we're kind of forced to look at those numbers in perspective. But stock-based compensation expense, so we definitely have to keeping an eye on this. I think it'll be slightly lower. Gain on sale of digital assets, so could see a little bit more of that. And then loss on retirement of debt. Excuse me. So they're not going to see that anymore. And then watching this in the home run derby. Hey, Anthony, I appreciate that, man. Thank you. I kind of forgot that was on. Honestly, I don't follow baseball too much, but I try to here and there. I don't know if you guys saw, or since you're a baseball fan, I'm sure you heard about it. The guy that threw the perfect game for the Yankees. I was like up late at night, just chilling, and then I was like gonna go to bed, and then I got an ESPN thing like, this guy is going into the ninth inning. Watch live right here. Click here, and he might pitch a perfect game. I was like, no way. And I was like, am I gonna jinx this if I watch it? And then I was watching it with my brother, and he was literally like, imagine right now that somebody messed up. I was like, bro, are you trying to jinx him? I'm like, that's happened before. He's like, oh, really? I'm like, you don't think that's never happened? Like, and then I also saw a recent clip after that of the guy who like leaned into a pitch when there was almost a perfect game. That's the most like jerk move ever. I would be so mad if I was that guy. But okay, so accounts payable. Let's get back to topic here. Prepaid expenses. So I'd like to kind of continue to see a little bit of prepaid expenses here and there. And like we talked about in the past, inventories are always going to fluctuate. So it's tough with the cash flow statement. That's kind of what I learned last quarter. I was like, oh yeah, I think they're definitely going to be free cash flow positive. Oh yeah, for sure. And it's tough, right? It's not that simple. It's really not that simple. So obviously they had a massive amount of cash flow for the previous year, 2021, but that's because they were raising a lot of capital through issuing stock, right? And then what they did was they raised capital, $1.6 billion worth through issuing stock, and that was when GameStop was near its peak in terms of when near its peak at that point in time. Let me be very clear. I don't think it's forever. Oh, it's the peak. It's over. So I guess peak isn't even the right word. And if anyone's ever watched Blue Mountain State, whenever I think of the word peak or someone's peak, I think of the episode The Peak, where it's like Alex throws. He's like the back quarterback. He becomes a starting quarterback. He ties the school record. He like throws like 7 touchdowns. Like it's the peak. It's the peak. It's the peak. And then his like roommates going nuts. So that's what I was thinking with the peak. But not the peak for GameStop, right? So we're not even close to that. And I think there is no peak. This mountain just keeps going, right? Just got to keep climbing. But whatever. Regardless, they raised $1.67 billion. That's a ton of capital. They paid off the remaining debt they had, and then they just took on one small, very low interest debt because now their company was in great financial standing at that point. So yeah, their free cash flow was amazing here. But what you have to understand too is there's always going to be a lot of things shifting in operations and what I'm understanding. So it's not as simple as like, oh yeah, free cash flow should be positive this quarter. No problem. But there's like, because there's many X factors, and then also something that's happening right now in investing activities, or I should just check right here. Because I feel like I'm starting to burn out now. I'm forgetting anything. Yes, investing activities. I knew what I was talking about. What was I saying? You have maturity of marketable securities and then purchases of marketable securities, which are paying you high interest debt, treasury bills, less than a year, but more than 3 months of age, because it's in current assets, the marketable securities. So that's how you know it's less than 1 year. And a cash equivalent, by definition, is a treasury bill or another short-term security that matures in 3 months or less. So also with treasury bills that are less than 1 year, they're not paying their interest monthly or something like that. They're balloon notes, or I guess it's technically what you call them, and I'm just fully becoming aware of the term balloon. That's why I'm saying it a couple times here when it comes to something ballooning financially. Ballooning in the sense you pay less than what the face value of it is, and then on its maturity date, you get paid the face value out. That's the theoretical math behind it, roughly. And also, now I just possibly confused myself. But to get back to the point I was trying to make, and again, like I said, guys, rocking and rolling and learning as I go here. So, and also really about to wrap this up because I feel like I'm starting to like not fully explain things well, and I never like when that happens. So, gotta keep the quality as premium as possible, right? But to make my point here, marketable securities and sales of marketable securities right now, like the past 2 quarters we've seen, it's relatively about the same. So it hasn't really affected the cash flow. But if suddenly they decide, well, we want to keep more in cash and cash equivalents, which are money market accounts and treasury bills that might be like a 1 month bill, for example, then if that's the case, you have more in cash and cash equivalents and not in marketable securities. And then you would have like an artificial increase in cash flow because it's like, oh, well, cash flow increase. It's like, no, they just didn't buy back as many marketable securities. Now there's just more cash or cash equivalents. So you have to really like look at the details. And then on the contrary, you could have a situation where they purchase more marketable securities than those that mature that same quarter. And then that's a scenario where it artificially damages the cash flow. It's like, oh, well, they lost negative 200 million in cash, or they had negative 200 million in cash flow for the quarter. Well, yeah, but if you calculate out the difference of marketable securities, that $100 million difference, that's still now in the form of cash. Different story. So just little things like that I'm really trying to keep an eye on as well. Because, you used to just like look at, oh yeah, the free cash flow. Oh yeah, the EPS. Or oh yeah, the net loss. But you got to like look at those details. And then really, what we saw last quarter, because this is last quarter and I'm looking at right now, is quarter over quarter improvement significantly. So I think we need that again for this quarter coming up. So $108 million loss. If we could ideally get to more like, I would say, -20, -30, that's amazing. And if can just swing to even break even, that is spectacular. But I really want to damper my expectations right now because I just think, like I always say, it's like a long-term game. So I would rather also dampen my, or what do they say? Under promise, over to deliver, right? So, but at the same time, I'm not gonna sandbag my estimates. Like, so, oh yeah, I guessed it right. Yeah, I told you guys it was gonna be this because, oh, it's even better than I said it was gonna be because I made like some BS estimate. So I'm not gonna make a BS estimate either. I'm gonna just continue to analyze and kind of observe what happens through the remainder of the quarter, which is these next few weeks here, going to the end of the month. So everyone shop GameStop so I can make a better estimate, right? And make a higher estimate. Nah, just kidding. But shop GameStop if you love the company, you like the stock, you should love the brand, right? That's just what I think. I remember your Mario Sluggers Fest stream with friends. Hey, Anthony, you like that? Yeah, that was with my friend and my brother. Yeah. I was telling him we gotta run that again soon. He's like, I don't know. But keep an eye out. I do want to do another one because I love Mario Sluggers. That was literally one of my favorite games growing up. Or like right now, I'll tell you, like there are times like I'm chilling with people, like chilling with my friends, and I'm like, yo, I should bring the Wii. We should fire up some two versus two sluggers, and we should get a bunch of beer because going out's fucking expensive, and playing sluggers is a lot of fun, and especially because I have a girlfriend, so like I don't have any. I'm not trying to run around out that much. No, don't get me wrong, going out's fun, and I'm not saying you can't go out if you have a girlfriend, but I also have no problem just chilling if I got the right group of people, you know what I'm saying? And when you have a classic game like Sluggers, you gotta love it. And sooner than later, I am gonna get the Switch. I really do want that. But I just love the Wii and the GameCube. I'm always kind of rocking and rolling with that. So I'm like, why would I get a Switch right now? But yeah, but I'm happy to hear you were there for that, Anthony. I kind of remember. I was like a few people on there. I was like, oh yeah, some people are interested here. Gotta love Sluggers. But yeah, and this was their cash at the time. Um, so they were at only 957 million in cash at that point in time last year. So that's it. Or let's say to confirm, were they having cash? Yeah, just cash and cash equivalents at that point in time. There was no marketable securities. So as of right now, the balance sheet is stronger and the net loss is stronger if you look at the start of the year. And of course, it will depend what is reported coming up. But at this point in time now, you have these marketable securities and even a little bit more cash equivalents and a high interest rate environment that's going to keep paying out on your cash. So that's going to help your bottom line a little bit. Sorry, your bottom free cash flow because of the investing activities and proceeds. And I feel like I'm just rambling at this point, but I think you guys kind of see what I'm saying. And I think I am going to wrap it up here for today. And Brave says, discover who holds my data. I'm good. No thanks. But yeah, I really just looking for improvement quarter over quarter. This is Q1 2023, and then this is Q1, Q2 2022. This net loss of 108 million or 36 cents versus negative 50 million or negative 17 cents. So ideally, you definitely want to improve year over year, even if revenue declines. I think that's a huge factor. If you could keep that bottom line improving, that's very good for confidence of the individual investor, just very good for momentum of things continuing to swing in the right direction. And then also, I would want to see improvement over Q1 of 2023 because yes, I mean Q4 of 2022 was net profitable, but it was also Q4 that's historically and for a long time until the business really diversifies, it just expands, and whatever happens, happens, right? Q4 is always going to be the largest quarter. It's the quarter of gift giving or whatever you want to call it, right? So when that's the case, Q4 is always going to typically outperform. So I'm not looking at that too much, but of course, I'm not saying like, oh, it should just be like whatever. They shouldn't try and be profitable. If they can be profitable, I'll be extremely happy. But what I'm starting to think is like even I've said like negative 25 million, negative 40 million, negative 30 million. Somewhere in there, you really start to see improvement, and then anything better, I think, wow, that's like really great. If you can get EPS to be lower than negative 10 cents, like let's say net loss is 30 million, right? Negative 30 million. You have EPS of about negative 10 cents, negative 11 cents. Then at that point in time, you're at what? still below negative 30 cents EPS for the year, and you still have Q3, which I think then, even if that just breaks even, you could have a great Q4 and you have a net positive 4 quarters cumulative, which is an S&P requirement, right? So it can kind of happen faster than you think if you think about it like that, because the requirement is the past 4 quarters cumulative needs to be net positive for EPS, and then also the most recent quarter. So if quarter four, like let's say this quarter coming up, net EPS of negative 11 cents, you'd have through the first 2 quarters negative, let's clear everything, negative 0.28 cents, right? And then the next quarter, let's say they lose like 5 cents, right? Like even Q3 is not quite profitable, but just again, it continues to move in the right direction. Then in the next quarter, they make $1 EPS, or maybe that's a little too exciting. Let's say 50 cents. Suddenly, that most recent quarter was net positive EPS, and then the past 4 quarters cumulative would be 17 cents of positive EPS, or it would be a net profit for the year on the bottom line, which would be really exciting. And then, of course, still at that point in time, if that happens, the naysayers are going to say, oh, well, just that quarter four is the only reason that they're profitable for the whole year, blah, blah, blah. Then whatever, right? We're going to have to see what happens at that point in time. And then also, hopefully Playr's kind of rocking and rolling and at least has the ball rolling at that point in time. So that's something to think about. But yeah, that's kind of where my head's at. And then I just want to continue to build estimates over time. Part of it, I'm going to make the page right now so I don't forget. Collapse this. Let's do a new note. Then I have a notebook, so you can just continue to organize this. New note. Let's do GameStop estimates. Do in the future. Q2, I'll put like Q1 2023. Tetron estimates I'll do. Then I'll do Wall Street estimates, actual estimates. And then I can start keeping track. Well, who's actually got better predictions, Tetron or Wall Street, right? Maybe that's something I can then do in a couple of years when we have some data. So kind of something I'll start to do, because this is why I want to use this Evernote thing, because I'm really trying to just have pieces of information organized and like have a digital notebook, so to speak, to really kind of just organize everything. But yeah, all right. Yeah, I think I'll wrap it up there for today. Thank you guys so much for watching, whether you're watching this back, watching live. I appreciate you. And I hope everyone has a good night.